All right, now let me now bring on board Mr. Rajnish Kumar and take the conversation forward on what he really makes of Paytm saga, how things are moving on the fintech front. Many of our viewers may famously recall that which is one of the most advanced platforms of State Bank of India, that in a sense was incubated during Mr. Kumar's time. The fact that he also continued in several capacities with different fintechs after his SBI stint also, it really gives him a very deep understanding of what is right, what is wrong, what is regulation, and where things have gone wrong. So Mr. Kumar, so nice to have you. Thank you for joining us.
Good. Thank you for inviting.
Let me first understand your thoughts.
On what?
On Paytm, in terms of, do you think what the regulator has done, they're simply trying to protect the public interest here? And is it justified?
Yeah. So there are we have to understand that how things work. And as far as Paytm is concerned, they have a company which was in payments, which is One Communications Limited, and there is a payment bank. And these are regulated entities. And the rules around a Paytm bank, rather a payment bank, and the rules around a payment service provider, which the parent company does. So there are well-known rules and regulations. And primarily, apart from so many responsibilities which Reserve Bank takes, but coming specifically to the banking, payments, financial services, there are three very important things. One is the stability of the financial system. Whenever RBI sees that some risk is building, they will take measures. Like you would have seen that they came out with the guidelines on the personal loans because RBI felt that excessive risk was building in the system. Second is customer protection. If you look at digital lending guidelines and even today's RBI Governor's statement about KFS, key fact statement, which is a very common thing that anyone who is dealing with a bank or borrowing money, the disclosures have to be very, very clear that at what cost I am borrowing, at what cost, or what are the terms and conditions, what are the foreclosure charges, what are the charges. So there's nothing unusual in this. Is the primary responsibility again cast on the regulator to ensure consumer protection. Third issue is around anti-money laundering.
Liquidity, can we flash? What is this here?
Pardon? Yeah. So what I was commenting on, and third is that how the business will be conducted, because there are serious issues about the banking system being used for money laundering and terrorism financing. So primarily, we have to see that with this onerous task, RBI will take such action which it deems appropriate. And the severity of the action, whether it was too severe, I really don't know, because I have not seen RBI report, nor I have seen what kind of warnings or suggestions or guidance was given to the Paytm bank. So commenting on RBI's action without even having looked at the report, I think it's very naive on anybody's part to report on that. But one thing I can tell you, because I was at the other end when I was chairman of a state bank or a managing director in a state bank or a managing director risk and compliance, that they are considered to be the best regulator globally. There is a huge appreciation of what RBI did in protecting India in 2008, what it does to protect the banking system in the country. So, I mean, casting aspersion, which I have been reading and listening on RBI, right, somebody who has no basic understanding of what their responsibilities are,
right, sir,
and how does the system work, only then you can make such ridiculous comments.
So, Mr. Kumar, Paytm was given multiple warnings, and that just also brings into question the role of independent directors and the directors. RBI kept on warning Paytm, they were penalizing Paytm, and finally, today what we even heard in the credit policy from the Deputy Governor that Paytm was given enough time and perhaps warnings to fix their house, which they failed to do.
Yeah, this is presumed because when RBI DG makes a statement, he's making a statement based on facts. When I make a comment, I am making a comment outsider, but it is presumed that a warning and the course of action which a regulated entity, I'm not talking about Paytm specifically, as I was explaining that even the large bank like the State Bank of India, so time to time, whenever RBI inspection happens, they point out certain things. And then there is a time in which the corrective action has to be taken. And today, if you're seeing that India's banking system has emerged so strong, how it is? Because RBI has played a very critical role in providing that necessary supervision, guidance, regulation. And if suppose I'm taking again, why is I bring a state bank? Because I was associated with the state bank, and the state bank says that we don't listen to you. They will close down the state bank also.
So, Mr. Kumar, what could be the out of jail card for Paytm? Do you think this could actually become a bigger problem and soon more and more regulatory challenges would come for Paytm?
As I said, that there are two issues. One is that the action is on Paytm Bank and restrictions on wallet fasting. So to that extent, yes, the payment bank is quite severely impacted. And the payment business or the other business which happens on the Paytm application, so that can continue, but that is mostly on UPI. Because if wallet or FASTag after 29th February, if there are restrictions on putting or adding new money, then existing money can be used. So that can continue to operate. If you have balance in your FASTag or wallet, you can use it till such time it gets exhausted, but you won't be able to add new money after 29th February. And as far as the UPI-based transactions are concerned, I don't think they are going to be impacted in many manner. But the question is that because UPI is all free and there is hardly any income from transactions, UPI transactions. So the business model and capability to earn through transactions, that is something which again is a bit doubtful about the profitable aspects of this transaction bank.
Mr. Kumar, given that post-COVID, we saw a huge surge in the fintech industry, interest rates were low, PE investors were ready, innovation was getting rewarded. It really has led to a lot of cross-selling, lot of fintech which are in BPL model, which are also in the business of lending as well as borrowing as well as lending. Do you think a lot of these fintech models, they need to be revisited, especially when it comes to the borrowing models?
No, if you're talking about the digital lending guidelines, so the way now the regulation is happening, that fintechs, they work in close collaboration with the regulated entities. And the primary responsibility, again, comes with the regulated entity to see that whatever RBI regulations and rules are there, they are compliant. And there is no choice if the fintechs are acting either as a technology service provider or as a loan service provider. They will have to comply with the guidelines given to the principal. Principal in this being a regulated entity, whether it is a bank or NBFC. So RBI will first get hold of those regulated entities if they find that they are not complying with the rules and regulations. So naturally, the regulated entities will ask the fintechs, who are essentially their agents, to ensure that there is no violation when you are onboarding a customer, when you are dealing in collecting money from a customer, or KYC, anti-money laundering. So that responsibility automatically will pass on to the agent.
Mr. Kumar, you know, it is also fintech. It is efficient. It is linked to the bank. It is accepting deposits. It is dispersing loans. Do you think that really should be the big architecture in terms of what fintechs actually should follow? I mean, there's a benchmark, just follow it with a little bit of innovation here and there rather than trying to reinvent the rules.
You have to put it in a slightly different way because it is owned by a bank, and a bank which is known for its track record of good governance. And the design principles which have gone in designing YONO, the design principles itself ensure its security and compliance. For the fintechs, because they don't have a banking license or they are not regulated entities. We are talking about self-regulation, that is different. So that is like an application being designed and run by a bank is different. But I think the principles, when any fintech even is designing an application, there cannot be no difference as far as the approach is concerned. Because if you're a part of an ecosystem, and particularly payment ecosystem, which is prone to frauds, which is prone to cyber crimes, which is prone to data breaches, you never know. I can relate to one small incident that a debit card transaction on an ATM could trigger a serious data breach that happened about 3-4 years ago. So from where the mole will come in, from where the security of the system will be breached. So it is a very, I would say, a very high risk and a very responsible behavior from all players in the ecosystem is needed. Nobody is trying to kill the innovation. You do innovation, but innovation brings its own risk. If there was no connected world, there will be no cyber security risk. There will be no data risk. So whatever you do, there are certain risks which arise. And then how do you mitigate them? Mitigation is through systems, through technology, and through intent and behavior. You may have the best systems and technology, but if the intent and behavior is not good, then you will not get the desired result or objective, and it can have serious financial, serious consequences for the entire payment and financial system. So responsible behavior at every level, not at the leadership level. There are a lot of training programs for the employees, for the board members, which they have to undergo. So unlike any other business, when you're dealing with money, the behavior is standard and the intent has to be at a different level.
Thank you very much for joining us. You've really poured in years and years of experience as a banker and as someone who really understands the sector very well as to what the issue is, what the core problem here is. And frankly, we continue to maintain as a channel the simple view that RBI is not against innovation, but they have to protect public interest. That's the message which we are trying.
Innovation has come because of RBI. We have to realize.
Yes, sir. That's the point. I mean, that's the point. Thank you very much.